Hello and welcome to another video by reitspro.com, and this is Gaurav Jain, and today we have a very interesting topic, which is Brookfield REIT. It continues to disappoint investors, and if you recall, the IPO in 2021 was at 275 rupees, but it's still at 250 rupees in 2024. That's a good 3 years later. Now, let me just introduce myself. I'm Gaurav Jain and I'm an author and a trainer, and you can get these books when you search on our site on www.reitspro.com. And there are plenty of resources also there on which you can look at. So Brookfield REIT is an institutional managed REIT which has grade A spaces and worldwide clients. Now, there was an IPO of Brookfield REIT in 2021 where it opened in February and closed on February 5, 2021 at 275 rupees per unit. Again, the price right now is not very encouraging. It's around 250 rupees. Even if you look at the last 1 year, it has made a high of around 270 rupees or so. Before that, it did cross 325 1 or 2 years ago, but then right now it's trading at 250. Now that's a bit of a disappointment. Now, if you look at the other competing Indian REITs, which is Embassy, Mindspace, Brookfield, and Nexus, you have the IPO prices right here. Embassy in 2019, whereas the latest Nexus in 2023 with their IPO prices there. Now, if you look at the distribution history, yes, Brookfield has been paying good yearly dividends or distributions, as they call it, and a lot of us would have questions like, oh, it's dipped because the shareholder loan has been repaid, that's why the value of the share has dipped. But that's not the case in REITs, as I've explained in other videos. That doesn't happen. It's a way of nomenclature of how the payouts are done, but that's another video that we've talked about. But if broadly speaking, if that was the relationship, this would not have happened, because all these other REITs also do the same thing. They give out their distributions as a part of capital repayment also. So Embassy 2019, the IPO was at 300 rupees. Now the current price is around 365 rupees. Similarly, Mindspace 275 was the IPO in 2020, and it's trading at around 350 rupees. And so is Nexus, which is very new and still trading at a good premium. Now, in this video, we'll talk about why Brookfield happens to disappoint, as we can figure out here. So the basic concerns are the NAV dip. I will show you the dip in the NAV as calculated by the company. Secondly, there is a recent acquisition which has probably not gone down so well with investors. Thirdly, there are questions on the income of the REIT. And fourthly, there's a global entity in trouble, which a lot of perception of that is there, which may or may not be true. Now, we'll dive into these very topics one by one. Now, if you see, there's been a dip in NAV in 2022 September. The NAV was 337 rupees, whereas now in September 23, it was 323 rupees. So there's a good dip of 14 rupees per unit of the Brookfield REIT. Now, there has been an increase in areas from 18.7 to 25.3 million square feet. And if you see, there's been an acquisition recently of Downtown Powai and G1. We made one video on that as well, and this has probably not gone down too well with investors. Now, if you look at the history in 2023 Q4, they gave a distribution of 5 rupees. In FY24 Q1, it dipped to 3 rupees 85 paise. It increased a bit subsequently, but then that itself was lower than 5 rupees. Now, that was also because there was an income support which was given by the parent company, and that in fact hiked up a little bit of the incomes that the Brookfield REIT had. But at the same time, it was not mainly about occupancies and not very organic, as they call it. So there were large SEZ areas, and leasing them has been taking time. And if you see, this is the snapshot from the Q3 FY24 investor update, and they talk about new leases and SEZ properties, and even the occupancies are lower compared to other REITs in the competing markets. Now, the global perception again has been a little problematic. We've seen a troubled entity, the parent entity, which which is the sponsor for the Brookfield REIT in India. And you see, if you've seen the headlines recently, it was talking about Brookfield defaulted on 3 billion of US commercial mortgages and so on, in spite of the fact that the assets under management is worth several billions of dollars. Real estate is again a huge component of that, and it's across countries and continents as well. However, there is a little bit of correction in India also, obviously, because the sponsor, so the perceptions have to be there. Then if you see the yield comparison table, now this is where things can look a little different. Now, if you see the tax implications, we've not accounted for here, but if you see here, we've calculated a yield, an approximate yield. It's just an approximate ballpark yield. And if you see the Brookfield REIT yield shines the brightest, it's around 7% today. If we take 4 rupees 50 paise as a quarterly, assume quarterly payouts, we are talking about 7%, which is pretty good compared to other yields. Now, if you look at Embassy, now let's just see what happens in case of the other ones, the Embassy, Mindspace, and Nexus. Now, Embassy has a large investor base after the Blackstone exit. If you recall, our earlier video talked about the Blackstone exit. After that, we have a 92% float in case of Embassy. Now, that's a huge amount, and it's a good favorite with institutional investors because the stock itself pays out decent payouts in every quarter, and that adds stability to the institutional portfolios along with liquidity, because there's a huge float. Compared to the others, there is a little float in, say, Mindspace and even in Brookfield. The market cap of Embassy is much larger. Now, the same thing in Mindspace, since the significant portion is with the promoters, now the prices vary in a range. That's what is happening with Mindspace, according to us. And then there is huge clarity of taxation part, because 90% of their payouts is tax-free. This is a chart which shows that as well. Now, if you look at Nexus REIT, now that is also giving a decent return if you calculate the total returns, including the capital gains as well as the payouts, because it's an institutional managed REIT. It's the only one of a kind of retail REIT in India, and retail REIT, and it earns from several sources. For example, rentals, CAM, revenue sharing, and marketing advertisements. So that does not happen in case of office REITs. So now the question arises as to what the existing investors need to do. Before that, before I go on, do log into our website, which is reitspro.com. There are plenty of resources there and books as well. And do subscribe to our videos. We would be highly encouraged if you do that and like the videos too. Existing investors, what should they do? The first thing that you need to understand as an existing investor is understand why you're taking REITs. The purpose of REITs is very different globally acceptable. Definition of REIT or acceptance of REIT is very different. So the cash flow predictability is extremely important, which comes with fixed time and amount. Secondly, it adds a lot of stability and diversification for portfolios. Thirdly, the investors have patient capital and they want to hedge their inflation. These are the basic purposes of a REIT. Now, this is very different from what an equity investor or a debt investor would want. An equity investor wants excellent growth and would take more risk. A debt investor just wants a higher return. Here, you have to see a combination of everything. But the silver lining today is that we feel that the worst seems to be over, because COVID was the time when the office occupancies were the least, the malls were not doing well, and so on. And then the high interest regime, which everybody perceives, is probably for a very limited time. Now, let's come on to the point-wise parts about the what an investor should probably do. So first of all, know if you're comfortable with stopping your IRR calculations on buy and sell prices. But I know it's easier said than done. So don't calculate it that way, because your purpose of investing in the instrument are very different. So you have to have patient capital. Second part is that buy price, yields, and the current value, everything has to be in line with your thinking. And the taxation impact is something that a lot of people don't factor in their calculations. Please do factor in that, because if you're getting a 5.5 or 6% yield and a large part of it is tax free, you need to compare that. Okay, if I am putting in an FD of F7 or a debt instrument of 8 or 9%, then effectively after tax, how much am I getting? And in this case, what am I getting? The third part is that you need to probably be comfortable, like in all equity investing, company ethics, style, and the assets that it holds. And probably the best thing to do is probably see whether you would be comfortable with a direct real estate offering of the same kind or not. If you are, go ahead. Otherwise, you should not invest in a REIT that does not fulfill these criteria. There is contradictory news everywhere in the market. We've just seen that Brookfield REIT has the parent company has defaulted or walked away from loans. Now, there are also news that they're betting big on real estate. There is also news that it wants to invest $10 billion. Very, very recent news is in Indian Realty, it needs to invest about $10 billion. So what you need to do is have your own mindset clear on what is your purpose of investing in the REIT. Thank you so much. Do like and subscribe. Connect with us if you'd like to know more. And thank you so much.